What's up, everybody?
Cold Man Crypto.
Coming at you with another crypto video. Let's get it. Alright, so today I'm not going to say much in the intro other than all of these interviews that I've taken clips and put together. Probably about 10 hours plus worth of interviews from this guy named Tom Bilyeu. Go follow him on YouTube, on Twitter, on Facebook, everywhere. Tom Bilyeu, Anthony Pompliano, Robert Breedlove, Michael Saylor, Raoul Paul. I'll put all the information down in the description. Please just watch this video all the way through. In order to understand Bitcoin, you need to understand how the current system actually is set up and works, because we weren't taught that in school. My parents and grandparents didn't teach me that. They taught me to save my money. Well, if you watch the video, you'll understand why it's so important and why all I talk about is Bitcoin and blockchain technology. Please just do some research. Like, subscribe. If you got any comments, questions, concerns, drop them below. You've got to look into this. You have to. This is coming, whether you think it is or not. Whether you agree with it or disagree with it. This gives power back to we the people. Why would we not want that? Watch this shit.
Please research this stuff. I beseech you, just because I like to see other people succeed, I beseech you to research, even if you walk away saying it doesn't make sense for me. I just don't want people to miss this opportunity out of ignorance.
So I think it's a good story here. People just don't understand, right, just how powerful Bitcoin is as a force.
So I'm screaming from the rooftop saying, you might be cynical. You might think you don't understand it. You might think you can't afford to play in this, but you have to listen, because this is the opportunity. You can't come back to me in 10 years' time and say, well, we missed all of that. All the rich people got richer. No, you, I, everybody else is saying, now is your time. Don't be irresponsible, dollar cost average, do all the right things, but here is your opportunity. This is the biggest opportunity I've ever seen, and I'm going to take advantage of it, and so should everybody else. This is not rich or poor. This is an every person opportunity, and we've never had this before, ever.
I want to help enshrine the importance of inviolable property and what it means for humanity.
I feel a moral obligation to get people to look at cryptocurrency, Bitcoin specifically, and there's a famous saying, I'm almost certain you've heard it before, which is poor people spend, the middle class save, and then the wealthy invest.
Now crypto comes along and I'm like, oh my God, this really is this. It is a moment where all the people who are angry, frustrated, disenfranchised, this is your fucking shot.
Bitcoin taught me economics. It taught me personal finance. It's taught me social psychology, all these different things. But there's an element of just understanding, hey, invest. Because at this point, given the inflation and the monetary debasement, it is impossible, literally impossible in America to get a financial security position by saving. They're debasing the currency. 38% of all dollars in circulation were printed in the last 18 months.
That's insane. That's insane. Like when you think that we're over 200 years old as a country, that's really bananas.
38% in the last 18 months. 45% of Americans hold no investable assets. And so really that 45% of folks are living paycheck to paycheck. They keep all of their wealth stored in dollars in a bank account. They tend to be, obviously not very well financially off, but also on top of that, they tend to actually not be nearly as educated about how the system works. So there's a wealth inequality gap, but there's also a very large education gap. I mean, think about if I told you to go play a game and I said, but I'm not going to tell you the rules, right? It'd be pretty hard to play the game at first, at least. Maybe you figure it out, maybe you don't, but you're obviously going to be much better equipped to play the game if I explain to you how the game works and what the rules are. And so if you think of money or finances as a game, there's really one key rule that everyone has to understand, which is the dollars will be worth less in purchasing power terms over a long period of time. That's not a negative towards the dollar. That's not a positive towards the dollar. It's just that is a fact.
And we call it inflation.
Yeah, and the system is built that way. And the economic argument for why it is built that way is because if I know that my dollars are going to lose purchasing power, meaning that today it costs me, $2 to buy a loaf of bread, in 5 years it'll cost me $4 to buy a loaf of bread, I'm financially incentivized to either invest the money or to spend the money. But holding it is a losing proposition. Now, that economic theory is predicated on the fact that everyone knows the dollars are going to lose value because what ends up happening is those 45% of Americans end up not investing the money or really spending the money. They're trying to save the money, but it is losing value. And I always go back, and I think this generational idea is really can be extrapolated even further. It's not just folks on the inner city. If you think back, I'm 33, you're in your 40s. If we go to our parents or our grandparents, for the most part, their financial advice was save. Right? Spend less than you make. If you save, then you can make your way to financial security. That was actually true, specifically around our grandparents' generation, a little bit for our parents, and then for us, not so much. And so the advice that was passed down was actually predicated on a situation that no longer exists, because before 1971, there was nowhere near the debasement of the currency that there is today.
I did a piece that was probably the most viewed piece I've ever done, called The Retirement Crisis. And it resonated because I kind of showed how people haven't seen it. Check it out on YouTube. It's well worth your time. And it's a long time ago. It predicts a lot of what's going on now. And the point being is that there's a bunch of retirees, the baby boomers, and they've kind of screwed it all up because they've got all the debt. They've got too much equity exposure. It's really hard for them to retire. This is why the Federal Reserve don't like equities going down, because you've got this richest group on earth who are kind of stuck. They never got enough money to retire on. But I want to look through the eyes of the millennials. So they are 32 years old, at the same age their parents at 32, the baby boomers, had all-time cheap valuations of equities, all-time cheap bonds, all-time cheap credit, all-time cheap property, right? So they couldn't help but make money. They kind of screwed it up because they actually ended up going into debt as well. But they couldn't help but make money. So then the millennials had the opposite. All-time record valuations of equities, all-time record valuation for bonds, all-time record credit, all-time record highs in property. So I'm like, these guys are screwed unless something else comes along. And that thing is crypto.
This is the first time where the retail investor, so the average everyday person, gets to front run, meaning go before the big institutions. It's always been the other way around. The big institutions take the cream off the top for themselves, and then all of us get the leftovers. And this is the first time where it's flipped.
So the system is against you. In this, the institutions are being held back by regulation and can't do it, but we're not. And we know that they have a lot of money because it's actually our pensions. And so they're going to put our pensions in this in the end. Well, we might as well make money from them coming into the market later and driving up prices ridiculously, because that is what's going to happen. Once this ETF is listed, every RIA in America is going to be advising their clients to buy the Bitcoin ETF and the Ethereum ETF, and it'll drive another $500 billion of price appreciation. This is all coming, and it is the opportunity. Guys, I'm giving you everything you need. No excuse not to educate yourself. It's all there. At first, you go in there and go, "Oh, I don't know what this is all about." That's okay. You'll find the thing that interests you, and you'll find your way in, and then you'll go down the rabbit hole. But together, we can all benefit from being part of this community. Crypto is a community in its own right, and we're all benefiting from being part of that. We're all part of that community. No other asset in all recorded history has ever done this. And we haven't even started. I still think there's probably another 100x from here. It has grown as an asset. It's gone up. I think it's 2 million% since inception, because the future expected return of crypto, it's been growing at 213% a year in returns. That's how much it makes, even though it's very volatile. Sometimes it's down to 70%. Over time, you're making 213% a year.
45% of Americans hold no investable assets. 80% of millionaires in the United States inherited $0. So the narrative is
interesting.
Everyone inherits wealth and it's just passed down. Well, 80% of Americans inherited nothing. 20% inherited something, 80% nothing. The second one is that 33% of millionaires in America never made more than $100,000 in a single year. So you start to ask yourself, well, how does it that somebody that doesn't make six figures a year become a millionaire? Well, they have to be disciplined and understand personal finance. It is possible to do it. It's not everyone. It's hard, right? It's not the easiest thing to do, but it can be done. And so as you start to understand, okay, the education is a huge piece of this. You actually see that the people who are wealthy, some of them could explain to you why they're doing things. They have a kind of a deep level and detailed knowledge of the actions they're taking and the reason for it. There's a whole other group of people who are wealthy who couldn't explain any of it to you, and they just know that their parents told them, hey, buy real estate. Real estate always goes up. But they don't understand printing of money. They don't understand quantitative easing, interest rate. None of that stuff matters. They just did the action. And so there's a lot of paths to get to kind of the desired, area, if you will. But I do think that Bitcoin specifically, what it's done for me and for other people is I have an economics degree, which is crazy because I didn't learn anything, right?
So from 2010 to 2020, the money supply expanded to 7%. So all the cash you're holding is losing 7% of its value. assume you have a 0% interest rate or zero yield on the cash. I have to invest it in a strategy which is going to appreciate faster than the money is devalued. But I'm not beating the hurdle rate, and the hurdle just tripled. This is the problem that a company that's cash rich has, and it's a problem that anybody that works for a salary has, which is I generate a cash and the currency is being devalued every year. The real question is, what's the rate at which it's devalued? Money or US dollars have ceased to be a store of value for at least the past decade since the great financial crisis. What's the problem right now? The problem today is the currency is being devalued at 20% a year, not 7% a year. And the second problem is some stocks could hope to grow 20% a year, like the minority, 5% of them could grow 20% a year for the past decade. What percentage of stocks can grow 30% a year? Because now you got to grow 30 or 35% a year because the hurdle rate just jumped. What I saw was if you had a large portfolio of stocks or assets and you went into this pandemic, after the Fed ended up expanding the money supply with the interest rates going to zero and the expansion of the M2 monetary base, the money base, you found that you were actually 25, 30% wealthy or doing nothing. You could have done nothing the entire year. As long as, right, the only mistake you could have made is do something, right? If you had $1 billion and you did nothing for the entire year, you had $1.3 billion at the end of the year. On the other hand, if you had a Main Street company and you're generating, let's say, $100 million a year in cash flow and you're valued at $1 billion because of the cash flow, you would have to be generating $130 million after a year to be valued the same, because the value, the assets that the money buy is being devalued by 30%. If the currency is devalued at some rate, and the money supply expanded to 24% last year, but clearly the currency devalued, which means that if you're a Main Street company, you had to work 20% harder to get nothing. And if you're a Wall Street company, you had to do nothing to get 20% better. And so what I saw was a shift in balance of power, and a shift in wealth. And it was pretty disturbing to me too. You don't want to be the dentist working for a fixed amount of money that's getting 20% less valuable every year. Okay, so what's Bitcoin? Well, Bitcoin is the strongest asset the human race has ever invented. It's like gold with none of the defects of gold. But ultimately, the appeal of it is that it's an open, permissionless protocol that everybody on Earth can engage in. Anybody can mine it. So anybody can contribute security to the network, and anybody can run their own node, and anybody can own it. And then any company can plug into it. And so there's nothing that open. There is no monetary protocol or asset or currency that is so open as the Bitcoin asset. Bitcoin is the single most secure network in the world. It's the most secure database in the world. It's the most secure asset in the world. Bitcoin's the best performing asset for the past decade, and it's 100x better than gold, and it's 10x better than equity portfolios. So the volatility is the price you pay for the performance that you get. It's very rare that you find a technology that's the solution to every rich person's problem and every poor person's problem simultaneously. And oftentimes the best investment idea isn't the most comfortable investment idea. I think if I told you there's 100% certainty you are going to lose 7% of your money over the course of a year, you might think, well, I have a decade before I lose half of my money. I have time to think about it. That's the status quo when monetary inflation is 7%. If I told you there's a 100% probability that you're going to lose 20% of your money over the next year and half of your money over the next 3 years, well, you might think you need to move faster. Well, what if I told you you're going to lose all your money? What if I told you the currency is going to collapse to zero in 3 months, which is kind of what it did in Zimbabwe and Venezuela? Or what if I told you we're going to have 95% inflation? I think the unofficial inflation rate in Argentina is like 85% this year. What if I told you we're going to have hyperinflation? Everything will be twice as expensive next year. Now, how long would you wait before you took a risk? And, if you're sitting wealthy with lots and lots of stuff and a comfortable lifestyle and a comfortable portfolio, you might not see the same impetus, right? You wouldn't have the same inspiration. I give you a bunch of money and I tell you, you want to keep it and give it to your grandchild. Do you buy a building in Manhattan? Do you buy a ranch in California? Do you buy a stack of gold bars? Do you buy shares in a company headquartered in San Francisco? Do you buy bonds issued by a government or a company? Or do you buy Bitcoin? You can see the problem, of course, is the debt is devaluing rapidly. The land in California can be taxed and is not movable. The building in New York is not going anywhere. It might be valuable to a rich person that lives in New York. What about a rich person that lives in Beijing? Do they want your building in New York? How are you going to hide your building, right? Buildings get property taxed.
Bitcoin is the first permanent implementation of this principle we've been refining throughout human history of inviolable property. It actually cannot be violated in any way. No one can produce more than 21 million Bitcoin. So although it's an invention, we've actually discovered something with Bitcoin. We've discovered absolute scarcity for money. So if we're back to those 5 properties of money, in terms of scarcity, Bitcoin is absolute. It's not relative, right? It doesn't change. So it's the first fixed supply money there has ever been. And I don't think you can recreate that because by definition, money is a centripetal network effect. So we tend towards one. So for the same reasons we had one analog gold, we're likely only to have one digital gold. So your property rights cannot be violated by inflation because no one can change the supply cap. If you hold 1,000 Bitcoin, you hold 1,000 of a possible 21 million forever, right? You have a guaranteed fraction of the total money supply. You cannot get that level of assurance with any other asset in the world. Full stop. Doesn't exist. Even with gold, you can hold all the physical gold you want. You're still not immune to some technological breakthrough. We figured out how to produce gold in the lab very cheaply. We mine an asteroid, we mine the ocean floor, we find a new South American bonanza, whatever. You're not immune to any of that. But with Bitcoin, and again, it's a bit of a bet because it's only 13 years in, but it's done these things perfectly so far. If it continues to do what it's been doing for 13 years, you have a guaranteed fraction of the total money supply. So you have an inviolable property right. Bitcoin's the first property right independent of the monopoly on violence or independent of physical production. It's an informational property right. It's just an alphanumeric string. You can store it in any information-bearing medium. Put it in your mind, put it on your computer, put it in a song, do whatever you want with it. What is money? Is that it's a universal medium of exchange. And we've tried a lot of experiments. We've had seashells, we've had glass beads, we've had cattle, we've used all kinds of things as money, right? Natural market processes determined that monetary metals were the most satisfactory across the first 4 properties or services that money can render to us. So when we look at money, the 5 properties that market actors voluntarily favor, you could also think of as the 5 services we seek from money are divisibility, durability, recognizability, portability, scarcity. Money needs to be divisible. Pretty obvious. You want to transact at different scales. You want to buy coffee in the same day that you go and buy a house, right? So you'd like to be able to give someone a coin or send someone a wire for 10 million bucks to buy a house. Money needs to be durable in that it's not going to corrode over time. If you put a bunch of gold in a safe, it's not going to decompose, right? The half-life on gold is way longer than matters to any of us. If you put a bunch of oranges in the safe and you were using that as money, that's going to rot pretty quickly. So clearly durability matters. Money needs to be recognizable, which means that each trading party can verify its authenticity. Money also needs to be portable. Pretty obvious. You want to be able to move it across space, right? If I'm buying something in another city, I need to get my gold or dollars to the other city to give it to the recipient. Finally, and most importantly, money has to be scarce. And now we typically think scarce is purely a supply side function. That's not what scarcity means. Scarcity occurs when demand outstrips outstrips supply. So when there is more appetite for the thing, then there is a supply of the thing. Your property rights will be violated by inflation. When the Federal Reserve is printing money, you're going to now need to outpace inflation with some other investment. Otherwise, your property will be diluted. But if you want to drive people insane and really create a lot of conflict, just try changing the rules of the game every few hands. Now, this applies to any game, especially money. That's what inflation's doing, right? Nobody knows the rules of the US dollar. How many are in circulation? How many will be in circulation? Who's profiting? We don't even know exactly who the shareholders of the Fed are. What's their dividend? What are their criteria for deciding how many dollars to produce? Who's getting it first? Who's going to be the Fed chair next year? There's all of this uncertainty injected into managing the asset that's intended to be an insurance policy against uncertainty, that it's just oxymoronic in a way. And so Bitcoin is another way to look at it, is the most certain form of money we've ever had. And if money is an insurance policy for dealing with uncertainty, you would want maximal credibility in the properties of money to deal with that uncertainty. And that is Bitcoin. And that's why people think you can ignore it or avoid it, or I don't want to hear about it. But it's like, if you prefer wealth to poverty, and if you depend on the marketplace for wealth, which is the only generator of wealth, then you have to pay attention to Bitcoin. And to the point of a Bezos or any individual actor holding an outsized portion of the money supply, that's capitalism. What we have removed, though, is the ability for Bezos, because he has such a large position in the money supply, to change the rules of the monetary network, right? And that's what the Fed has effectively done. It's like, we hold all the gold. We're going to make the rules. Bretton Woods, 1944. We're going to award ourselves this perpetual free lunch on the productive economy for the right of monopolizing money, which sounds asinine because it is. That's not possible on a Bitcoin standard. You don't have to buy a whole Bitcoin. Each Bitcoin is divisible into 100 million subunits called Satoshis. Bitcoin is essentially, and that's one of the reasons it's better than gold, infinitely divisible, right? It's
only 21 million units, but you can infinitely divide it.
That is the key difference, is that Bitcoin is the one asset in the world that no one can control.